help with tax, don't know what to do. The Brysons are here for you. We know every tip and trick. It's serious tax talk with a Louisiana twist.
Hello and welcome back to another installment of Talkin Tax. We're doing tax talk with a Louisiana twist here on the show. I'm your host, Ryan Ruff. We'll be joined in just a few moments by really the stars of our show. That's Carrie and Angie Bryson, the co-founders of the Bryson Law Firm, which serves the greater Louisiana area. But first, for those of you that may just be joining us for this third episode, and maybe you missed episodes 1 and 2, I just want to do a brief little recap for you as to what you may have missed. In the first episode, we really just introduced you to the Brysons. We wanted to share a lot about their upbringings, their roots in the Louisiana area, and ultimately them forming what is now known as the Bryson Law Firm to help Louisiana individuals with their tax issues. Then, in our second episode, we did a really broad, overarching episode where we covered a lot of the options that are available for tax resolution, specifically the services that are offered through the Bryson Law Firm and some of their dealings with clients and examples of cases that they've worked on and issues that they've faced along the way. So if you missed either one of those episodes, feel free to check, circle back, make sure you hit them because there's a lot of great information within them. But today we've got something special for you. We're going to dive into specifically one of those options for tax resolution. It's a topic that's super pertinent right now, especially given the COVID-19 pandemic and what that's done for business owners, specifically small business owners. So if you're sitting here, you're a business owner, you're hearing what I have to say, we've got a great episode lined up for you with some great information that you might want to grab a notebook for. So with that, let me go ahead and bring Carrie and Angie Bryson on to start today's conversation. Carrie, Angie, how are we doing this morning?
Great. Thanks for having us.
Doing great this morning.
All right. Well, hey, like I said, we got a great conversation on tap for our listeners today. The topic of the day, payroll taxes. I know it's probably the most unflattering of topics for a business owner to want to dive into, but I think a great place for us to start today, guys, would be just to give us an overview on really what are payroll taxes and why is it that business owners have to pay them in the first place?
So payroll taxes are what's considered as a lot of, there are several elements of payroll tax, first of all. But generally, it's considered the payroll tax is what the employer, every employer who writes a paycheck has to withhold a certain amount of money from the employee's paycheck, and then they take the money and remit that to the government. And that's considered the payroll tax. But before the money is remitted to the government, the employer also has to do a certain matching of the Social Security, Medicare, the FICA tax. They have to match that as well. So that combination of employer money and employee money is considered a payroll tax.
Gotcha. And Angie, do you have anything to elaborate on that front?
The big distinction between the encompassing term payroll tax is the employer's portion. The matching portion is referred to in our industry as the non-trust fund portion of the tax, and the employee's portion, the side that the employee contributes, is the trust fund portion of the tax.
Got it.
We'll refer to that in this podcast.
Okay, gotcha. And I was just going to ask, why is it really that businesses even have to pay these taxes in the first place?
Well, that's a great question. But basically, you're contributing to the Social Security system, you're contributing to the Medicare system, and then there's an Obamacare portion as well. And then the employee's portion includes an income tax component. So as you're paid, you pay your taxes on your income that you earn along the way, rather than having a giant tax bill or an income tax bill for the entire year at the end of the year when you file your tax return, which is a challenge for self-employed people, which is a whole different podcast, personally.
So basically, the bottom line, I think, is the government is forcing employers to be tax collectors.
Correct.
They have to take the tax out, withhold it, and then remit it to the government. So it's a way of ensuring that taxes are collected and paid.
That's a good synopsis. A very good capture of of the gist of payroll taxes for sure.
Well, hey, it's a good thing he's your partner in crime then.
Yeah,
Um,
right.
so, hey, now let's get into the what if, because that's always the fun one, and I'm sure anybody who's listening or watching is thinking of this. What if, or what are some examples of things that could happen if a business owner neglects to ultimately pay these payroll taxes? Ultimately, guys, how serious of an issue is this, and that we're talking about?
I think we both, this is an easy question because it's extremely serious due to as Angie was explaining, due to the trust fund nature. It's money. It's not the employer's money. This is money that was withheld out of the employee's paycheck, and that money's held in trust. That's why it's called a trust fund portion. It's not actual, and the person remitting the money is not the actual person it's for the employee. So at the end of the year, these businesses are, of course, required to do W-2s. They have to issue these W-2s. Even if the government did not receive the money, they still have to issue the W-2. And the government honors that and they respect that. So they don't then in turn go to the employee and say, hey, we didn't get that money, so you're not getting credit for this. They go ahead and credit the employee's account, and then they come back to the employer and force them to pay. To pay that then at that time, because of the trust nature, and because it's something that can get out of hand quick. The government has a lot of mechanisms in place through the computers and stuff by making people deposit quickly, because these deposits have to be deposited. I mean, in some instances weekly, biweekly, just a few days after payroll is made. You generally have to make your payroll deposit. And the computers are set, the parameters are pretty tight that the alarms go off pretty quick. So usually the government is not going to let this problem get too far out of hand. Whereas an income tax, it's an annual thing, so they don't really know that the tax isn't paid until the return. So it's a long time. Payroll tax is a much shorter fuse, and the government's parameters for collection and for being aggressive are a lot less than an individual income tax. The payroll taxes, the thresholds are much lower to get revenue officers involved.
Yeah, that's really interesting to hear. So it's like the IRS is just keeping a more keen eye, essentially, on businesses than the average individual with respect to taxation on their end. But guys, now I kind of want to switch gears and maybe talk about an example that you might have of a case that you're currently dealing with, just dealt with, or even one that's just super memorable for you guys, or where you dealt with an individual or a business owner that was facing payroll taxes of a serious magnitude, and ultimately they came to you for help, and you guys were ultimately able to help them. How did that process go about?
Sure.
I mean, there's so many. I'm gonna let Angie do this. We could talk about that all day.
I do want to say that this particular case study that I'm thinking of, people or businesses don't always get into payroll tax issue trouble because they just choose not to pay the payroll taxes. That does happen. Some people will cash flow their business with payroll taxes, and that's a different animal. But in this case, the business had a long time bookkeeper, accounting assistant, and I think 30 plus years of experience, longevity with the company. And she decided at some point during her career with the company to stop paying the company's payroll taxes, and to the tune of $500,000 over the course of a few years. And the owner was unaware because she was able to, and she took the money, essentially embezzled the money. The owner was really unaware, mostly because there was they had a long-standing relationship, and he trusted her. And anyway, when he became aware of it, obviously there was an issue there, and she was terminated. And so now we're dealing with how the company is going to get that money to fund the old tax bills. And, we're working with a revenue officer to get an installment agreement in place, payment plan. But it's a lot of money, right? I mean, I don't know that this business can actually completely pay that bill back within the time frame that's allowed for the IRS to collect it. So it's a difficult case, but we're trying to get the payment plan in place. But the big thing for me is we're working with the IRS and the revenue officer to abate the penalties, which are there's some serious stiff penalties with payroll tax bills intentionally by the IRS and the government because they take it so seriously. I mean, it's almost 50+% of the tax bill.
Wow.
So you're talking about a lot of money. So in this case, if we get it abated, if we get the penalties abated, he stands to save around $350,000, which is a lot of money, right?
Oh
It's
my
all,
gosh, yeah.
yeah, right. So those are some of the things we can do. Get you into a payment plan, step in front of you, between you and the IRS, hopefully get penalties abated, particularly in circumstances as this. And then we also, and I'll let Carrie speak to this, can help you, or help the business owners by protecting them individually, because there's a whole side circus going on in this arena, and it's important to protect the business owners if we can as well, because the IRS will try to assess the tax to them. So if you want to speak to that, maybe.
So, I mean, yeah, I mean, that is a whole nother topic in itself there. I mean,
Yeah.
as you see, there's a lot,
There's a lot of
moving
moving
parts
parts,
here in this. I would say, though, there is so much of all the areas of taxation. There's so much that we can do on our side to get relief.
Absolutely.
It's fast moving. Personally, myself, I mean, I enjoy these cases because there's so much we can do, and it's real fast moving, and it's a lot, and it's usually the money, like Angie said, the penalties are so drastic that the money gets out of hand very quick. But it's even little simple things, and one of my favorite things I love to do, because it really gets under my skin when I see the government do this. But they'll the penalties are there's certain time frames. It's a very large penalty, and then if the debt's not paid within a certain amount of time, the penalty drops. Then it drops to a smaller, and it keeps dropping. Well, when people and business owners, they don't necessarily realize what's going on. They'll try to make a payment. Well, the government, the way that they apply the penalty, they will apply it in the way that will maximize that penalty. So in other words, like let's say you have a problem, a tax problem for last quarter, and you're trying to make a payment, for your current quarter, you're just going to keep that problem, but you're trying to get back and get right on this current quarter. Well, the government will take that money and put it to the old quarter where the penalty's lower and try to maximize the penalty on the new quarter. So then they create another issue, and the penalties are going, and they do it all the time. And and people, most business owners don't realize that this is, and wouldn't know how to fix it, wouldn't even know how they're being applied.
Correct.
So there's just so much that we can do in this, and that honestly really is an easy fix, because once you call, basically, lack of a better word, you call the government out on it and say you're not allowed to do this. I mean, they're not. Then they go and they fix it. So, but you have to catch them every time. I mean, you have to watch, look at the records, you get all the right records, get all your payroll records, and make and show the payment. So it's a document intensive thing, but it's something you have to do. And as Angie pointed out too, I mean, the biggest risk that I find, because even though, and people don't realize this, everybody who goes into business, smaller business, they're self-employed, is going to set up an LLC. They're going to set up a corporation. Some type of legal entity is going to be formed to shield themselves from personal responsibility in most cases, because
Should if they don't.
that's the whole reason for having these LLCs, and that is to shield yourself from personal responsibility. But no one knows that in this situation of a trust tax, the government, despite you setting up this LLC and doing these things to personally shield yourself, so all your other creditors can't do it, but the government can. They can come and basically just, despite the fact that you're an LLC, still take that trust fund portion of that tax and assign it to you individually. So then it becomes on your 1040 account, your individual, and it becomes collectible. So now your house and all your other stuff, it becomes collectible for this tax. And you have an LLC thinking that your house, your personal stuff is protected. And it's not when you're running a business in these situations. So like I said, there's a lot of moving parts, a lot of things happen, a lot of things happening fast. So, as lawyers, there's a lot that we do and can do in this case. There's a lot going on.
Right. I mean, in our last episode, guys, when we were covering the various options for tax resolutions that exist out there, we spent, I think, the most amount of time discussing payroll taxes as a whole, just because there's so much to unpack within this topic. So I appreciate you guys, laying out kind of some of the strategies that you implement for individuals that you work with, as well as some of the circumstances that you can really face as a business owner. But this next question I have for you guys is a little more circumstantial, given what we've experienced in the last year with the COVID-19 pandemic. Obviously we saw a lot of people losing their jobs because businesses just couldn't stay afloat. It was, there was a drastic shift in where we were allocating dollars and cents, and the economy took a hit. I mean, it happened. So that being said, naturally, the unemployment rates begin to rise. So with that being the case, do you believe that that had some sort of impact on the IRS and their drive to collect payroll taxes from the businesses that are in fact still afloat, or particularly even the small businesses that are still afloat?
Well, if you're still in business and you have payroll, regardless of the circumstances, COVID-19 or hurricane area, disaster area, if you're paying people, they expect you to pay those payroll taxes. They don't care whether you're making money or not. If you have payroll, you're expected to pay the taxes. So with that being said, if during COVID-19, if you didn't have payroll, then obviously you didn't have an obligation to pay the payroll taxes. But there was a pause or semi-pause, I would say, in collection activity during COVID-19 because, the IRS was not working and they were a little more lenient with collecting old taxes maybe, but prior to COVID-19. But recently, and particularly in the last 3 to 4 weeks or so, maybe 30 days, they're coming hard. And the leniency is basically non-existent right now. We've got several cases where very even low dollar amounts of payroll tax. And when I say low dollar, it's a lot of money to us, but in the payroll world, these numbers get big quickly because of the penalties. So, anything under 50,000 in a payroll tax case was normally just kind of in limbo status, maybe worked by the phone world in IRS, but those things they're getting hot. And the local collectors are coming and they're knocking on doors and leaving business cards and making phone calls. So I would say it's pretty much non-existent as far as leniency.
Yeah, the only thing I would add to that is kind of the flip side is some of the relief giving under the CARES Act and whatnot addressed this payroll tax because they realized the obligation of these people. So strategically, with CPAs and the people doing the taxes and stuff, there was some benefit given to payroll tax. All the credits were given and things were given that you could take if usually the if was if you didn't avail yourself of any of the PPP loans or some disaster loans and things given. And some people didn't. And I had meetings with several clients where we would calculate, okay, is it better for us to take the credit or is it better for us to, get the PPP money in or something like that? So we had to make those calculations. So that was given. There was, just to show you the amount. I mean, people could have, just by the fact that, it would be a windfall for a business if they could take, not if they could collect the payroll tax, it's really the non-trust portion, the FICA portion, Social Security, Medicare, and the what we call the Obama tax too, but anyway, so it's all those portions. But if you could just get credits for those amounts, and some of those are still available, out there.
Yeah.
That's a nice little relief that was given. A lot of people didn't avail themselves of it because they went more for the PPP loans and things like that. But if you didn't, I mean, those are out there, and those are some credits that could be taken.
Well, the employee retention credits were carried into 21 as well. So for someone who is particularly worried about their payroll taxes, and they do, the biggest caution I would have with those mechanisms for saving on the payroll tax arena is you really need to get someone to assist you with that because it's a moving target right now. And compliance with the technicalities and taking the credits and those sorts of things are it's a complex arena, and the analysis can get intense.
But yeah, no, as we mentioned in a few of past episodes, it really just helps to have somebody in your ring, guys. It's somebody to look after you, to work through some of these issues that might be, because at the end of the day, you're a business owner. You've got a business to run as well. It's tough to kind of take the bull by the horns and deal with two massive issues at one time in running a business and also addressing, maybe back payroll taxes. But Carrie, you started to get into it with talking about these credits that might be available, because my next question was going to be, are there any like particular strategies that you guys use with clients and try to get them to implement with addressing these, payroll tax payments, working out payment plans, looking for credits, things like that? Is there anything at the forefront that you guys utilize right off the top when you have these conversations with clients?
My first strategy usually is, as I'm thinking it through. I mean, every case is different,
So many,
and that's
right.
that's the beauty of the law and
Yeah.
the curse of the law, is that every case is different.
Yeah.
But usually, I mean, there are some general parameters that we're going to start with, and it's always going to be, are you current and are you compliant? Are your filings up to date? If your filings aren't up to date, before I can make a move on any kind of resolution, I have to get the filings in. So we've got to make sure the 941s are filed and everything's filed, and then are we compliant? So I generally will start with, okay, look, we're going to get your filings to date, and you're going to start paying from here this day forward, no more problems. Because if you can't pay your payroll taxes as we're going, if you're not, your business is not making enough money to do that, then there's a bigger issue. There's a bigger discussion that we have to have about shutting down and about doing it, because
That's
it's
a rough
not
one. Yeah.
It's a very tough conversation to have, because
Yeah.
some of these people, a lot of clients, have businesses, family businesses have been hundreds of years, and now all of a sudden they can't pay, so those are some tough conversations a lot of times. But that's usually where I start, is from here to forward, you're going to pay these taxes. You're going to make everything file on time. Your problems be an old problem. We don't want to, if it's a continuing problem, that's a different conversation. First of all, if it's a continuing problem, you're going to have a very hard time getting any kind of resolution from the IRS, because they're going to shut you
won't.
down.
Right.
They're going to come. They're not going to keep allowing you to, to incur a trust obligation. So that's usually the first area of analysis for me when I start, is
Sure.
make sure, let's get everything filed. Let's make sure you can make it pay them. Then of course, once they get on that kind of track, then it's an old problem. And the IRS is, that's the perfect way to present a problem to the IRS, is it's an old problem. I figured it out. I got things. Look, I'm under control. It's not going to happen again. It's an old problem. Let's take care of it. They're more apt to do penalties. We could get some relief. Sometimes you could even get some settlement relief and pay less than what you owe, just to keep you going, just depending. But until we get you current and compliant, nothing's really going to happen.
Right, because you were starting to leak into my next question, which was about back payroll taxes. What does an individual do when you're faced with that kind of circumstance where you're failing to make those payroll taxes, in a timely manner? Now you've got back payroll taxes that you've got to start thinking about and considering. What are the options for an individual like that? I mean, I know shutting down the doors is probably the last thing that you want to do, but is that your only option in a scenario like that?
No. I mean, the IRS will work with you if it's yesterday's problem and not tomorrow's. The IRS will work with a business that can prove that it can fund the tax bill over time. So there's some work to do in that area. So usually if it's a viable business that can prove its viability, which is what we'll do. That's our job, right? Then an installment agreement is typically the go-to in that situation. There are some other more complex options, maybe an in-business offer where you settle the old tax bills. Those are tough and they're hard to get, but they do happen. And there's some ancillary issues that arise that are, for the business owners, because they end up having to assume some of the tax bill on behalf of the company, and there's a whole nother case to deal with there. But those are the big options, and then at the same time, you've got to protect the business owners. So there's always a side case, even if there's an installment agreement that is going to be put in place, because normally the IRS will protect its interest by making that assessment to the company, to the responsible parties who were the decision makers, the folks who they assume chose not to pay the payroll taxes and remit them. So yeah.
Well, so guys, one of the big things that we had talked about, in our last episode, and it seems to be a little bit of a recurring theme throughout the whole world of taxation and just the payments as a general, is there seems to be a lot of misconceptions floating around. I would say more so probably on the individual taxpayer side of things than a business end of things. Usually, when a business is paying taxes, usually there are, specific well-trained individuals in these positions that are handling this type of thing. But where it's an individual making tax payments, we're not all CPAs, we're not all trained in this, this realm. So it can be a little daunting, and therefore that can lead to some misinformation. On the payroll tax side of things, do you guys find any general misconceptions that may be floating around out there where you sit down with a client and you're having a conversation and they float some bit of knowledge to you and you're like, whoa, wait, where'd you hear that? Because that's not correct. Do you have any, little bits of that, popping up every now and then? Any misinformation out there that people should avoid?
The biggest comeback that I get from clients is particularly when they have contemporaries in the same business. As my buddy has this same business and he just pays his people as contractors, or he pays them cash and he doesn't have to deal with payroll taxes. And so they remove everyone from their payroll, so to speak, and they just make everyone self-employed. And that's a big, and that happens all the time. Some people will get away with it for years. When you have payroll tax problems, that's not the time to change the status of your employees. That'll raise a huge red flag. And the risk reward there is tremendous. So if you're treating someone as a contractor, but they're really an employee, and you're telling them what to do, and you're telling them when to show up to work, and you've got them under your thumb essentially, they are employees, and you're obligated to pay those payroll taxes. And if you don't, then the penalties are astronomical, and then you become completely responsible for all of the tax again, plus the penalties, plus they'll go they look back at all of your tax period. This is a huge, huge issue. So don't listen to your buddy, while you're fishing or hunting or whatever you're doing, or you're, by the pool, whatever. That's a big strategy and a huge no-no and misconception that I see daily, honestly.
Right. And ultimately, it sounds like really one of the general themes of our conversation today surrounding payroll taxes is that you need a trusted professional in your corner, somebody who knows what they're doing. Right, exactly. Somebody, yeah. Yeah, somebody who has walked these walks before, has talked these talks, somebody who has an idea of what they're up against when it comes to the IRS and what the IRS is going to ask about when they come knocking, given a certain circumstance. In fact, this same conversation, I feel like not only applies to just the payroll tax world and business owners, but individuals as well, which again, for anybody that wasn't with us, for our last episode on the overall options for tax resolution, I would highly recommend circle back, check out that episode because there's bound to be some helpful information in there for you. But hey guys, before we wrap up our conversation today on payroll taxes as a whole, is there anything in particular that we didn't cover? Any last thoughts that you want to throw out there for any business owners that might be listening right now? Any suggestions maybe for business owners?
Criminal, the criminal implications that we didn't really speak to as well.
Yeah, let's talk about it.
Yeah, you want to do that? I just, would call if you read the newspaper and there, or just even the IRS sends out reports with regard to criminal prosecutions, and this is not something we've really talked about a lot, but, the IRS treats payroll taxes differently from a criminal perspective because of the trust element. So when you read those news reports and they send out the Justice Department reports of what's happened last year or whatever, the majority of those cases are payroll tax cases. So I will caution business owners who have payroll tax issues that there is a criminal element to this, and if it's serious enough, they'll prosecute, and they usually win because it's really hard to defend a payroll tax case from a criminal aspect.
Yes.
Yeah.
Guys, I'm sensing a recurring theme here. It's get out ahead of these things.
Yeah. I was going to add, if I had advice to anyone, I would
Absolutely.
say get out ahead. Do not let, this is unlike an income tax situation where they'll sit for years and years, and usually you may have a couple of years before things get bad for you. In a payroll case, it's much, as soon as you're having troubles, get out ahead. It's time to get out ahead. And just to pick up on what Angie said, you know, and that it was kind of funny because we both had the same reaction when you were talking about the common misconception. That was immediately where I went to, because I can't tell you how many conversations I've had with people, you know, that business owners think that they just because they make somebody a 1099 employee, that they are a 1099 employee. And that's a legal question, not a factual question. And it's determined usually in most cases not in favor of of the business owner, because it's a legal analysis that we go through to make this call, and it's well settled. I mean, this has been thought of many years ago, so it's a well tried issue, you know, and the statutes are even written now to address the legal test. So that would be I think also that was kind of, I just want to reiterate that I had the same reaction that you making somebody a 1099 employee doesn't necessarily mean they're a 1099 employee.
Right.
Paying someone cash.
Paying them cash doesn't mean you get away with it.
That only hurts you more because now, you know, you can't calculate the expense on the business side, so you end up paying that person's taxes along with your own.
Yes.
It's just a double-edged sword.
And like I said, the exposure is they don't go, even though in that scenario where we're talking about, that Angie was talking about, let's say the employee in that situation filed their returns and paid the self-employment tax as they were supposed to do for years. If the government goes back and determines that was that should have been a W-2 employee, they can then force on you make you pay the tax that they've already paid as the penalty. Is the tax? The penalty is what should have been withheld and what should have been collected paid. It becomes the tax. Well, so the government collects it twice. And they're allowed to do that because it's a penalty.
They call it
so
a
it's
penalty.
it's not double taxation because it's a penalty for you not treating the employee, classifying the employee correctly. So they're around it legally because it's not double taxation, although it's the same tax they're collecting twice. And it does happen. So that would be and then get out of here. I mean, you hit that would be my second caution or second misconception, is that this will go away. You're not looking. I have the whole quarter because I don't have to file that return. The 941's not due till the end of the quarter. No, if you have an obligation to report and to remit your payment, so they're on it. Now they may be watching it and they may not be reacting as others, but they're well aware of what's going on in a much quicker amount of time.
Well, there's one other big tip. If you're going to make a big payment, get some help making that payment. Because if you just make it, the government's going to apply it in the government's best interest. And there are some things to do to protect you individually by making the payment, applying the payment to the trust fund portion of the tax only, which benefits the business owner and the business at the same time. So there's some artistry, some strategy to go into making payments. And, you know, and a lot of business owners will come to me and say, I made a big payment today. Or yesterday before I came here, before we hired you or engaged you. And I say, okay, that's great. But, you know, let's talk about doing that in the future because we really need to be on the same page when that's going to happen. Good for you. But a better way to do it.
Yeah, right. We need to have a talk.
Yeah.
Well, hey, look, Carrie and Angie, thank you guys so much for sitting down to chat with me about payroll tax today. A lot that we unpacked in today's conversation. I know we're going to hit a few other topics down the road, different topics, taking some deep dives like we did today. But for the average business owner, who especially, you know, dealt with some challenges and pitfalls throughout the COVID pandemic, may have faced something like this, you know, this I think is a super beneficial conversation for them specifically today. So thanks for being with us today.
Absolutely.
Thank you.
It was fun. Thanks.
Thank you.
All right. And we want to thank you, our listeners and our viewers, for tuning in with us today. If you liked what you heard, you like what you saw, feel free to like, comment, subscribe, share, you know, on whatever platform that you heard us on. Share it with your friends and family. Hey, maybe that business owner that we're referencing, we don't want them to make that 1099 mistake that we just mentioned earlier. But hey, look, again, we thank you for joining us today. For Carrie and Angie Bryson, I'm Ryan Ruff saying so long. We thank you again for joining us for Talkin Tax. We'll see you on the next episode.